Good morning and welcome back to Almus Market Mornings. First to Brussels, NATO leaders have unveiled an ambitious plan to lift defense spending to 5% of the GDP, an ironclad signal to Moscow, even if financing details remain a little fuzzy. Next, Hong Kong's currency guardians have been busy. The Hong Kong Monetary Authority spent nearly 10 billion Hong Kong dollars to keep the local dollar within its long-standing peg to the greenback, another reminder of the steady pressure points in the global FX markets. More on the currency market, the euro is powering towards 1.17, pushing the dollar index to fresh cycle low, while dollar rupee slipped below rupees 86 in yesterday's trading. Good morning, JK. I think I'm going to ask a question which a lot of us have been asking. Where do you think euro dollar and dollar rupee are heading from here?
Good morning, Swaraj. Yes, we'll come to that. Before that, let me deal with the points that you made about defense spending being increased by NATO members. You have to note that this is something that will happen only by 2035. And before this agreement was arrived at, there was a lot of disagreements between various members. Japan, in particular, was very vehemently opposed to it. Uh, but overall, it doesn't give a good feeling because now we were already hearing about de-dollarization. Now we are hearing about remilitarization in the world. So the world is going through a big transition. Yes, on the Hong Kong dollar weakened to its the lowest point of its range, and the intervention was meant to contain that. But long ago, Hong Kong authorities had to intervene even from the other side when the peg was looking like breaking on the higher side for the Hong Kong dollar. So the lot of volatility there and huge positioning there in the Hong Kong dollar, as well because of the arbitrage that is available between Hong Kong dollar interest rate and the US interest rate. I think this is a area that needs to be watched by the market because I think this volatility is likely to continue. Yesterday's events, I mean, Powell had second part of his testimony to the Congress, and he reiterated once again that the tariffs could result in one-time increase in prices, but cautioned that more persistent inflation warranted a prudent approach. But he also said that if it was not so, then they could reconsider cutting rates earlier. That there was something he left. Both sides open as far as the market is concerned, but what led to markets taking the yields lower and also the dollar lower is Fed's announcement of easing liquidity through adjustment in supplementary leverage ratio, and this will help banks to buy more treasuries, and the market dysfunction can be addressed due to this. And because recently we have seen some of the new issuances have received poor response. Even yesterday, 70 billion of 5-year notes which were issued by the treasury uh, got low response, although it finally sailed through, but with a higher yield. So since then, this announcement has pushed the yields lower, and this is one of the reasons why the dollar has weakened. Of course, euro has hit a new cycle high, and already we had a few Fed members in the last few days talking about early rate cuts, some even hinting at July. Market is not pricing in that much. Market is just pricing in 25% probability of a July cut, but more than 65% probability of a cut in September, and some are talking about 0.5% cut in September. So the expectations are all over the place. But yes, we are on the path to cut at least from September, and more cuts. And even one of the investment bankers actually said yesterday, predicted rather, that in 2026 the Fed rate could fall by as much as 1.75 points. 7 rate cuts is what he is looking at. So market is looking at various probabilities and how the US economy is moving. And of course, we'll have an indication from GDP data today, where the expectation is for a minus 0.2% cut. We'll have a look at the jobless claims, which have been inching higher steadily of late, continuing claims also hitting record, multi-year high. And then, of course, the durable goods orders. These are the economic indications. Yes, back to other news, the uh, fragile truce between Israel and Iran has continued to hold. But Trump threw a spanner in the works by saying that conflict between Israel and Iran could start again, perhaps soon. According to some media reports, and this was also mentioned on the sidelines of NATO meeting. So market is looking at that as well. And the other uncertainty facing the market is the deadline for tariff 90-day pass, reciprocal tariff. So that is also coming up on December 9th. There are mixed indications again there. Some say that there could be a host of deals that could be announced in the coming days, but some say that possibility of the December 9 deadline being postponed. So these are the uncertainties that the markets are facing, and yes, nothing is stopping the dollar from falling. Stopping and falling, stopping and falling is what we are seeing. Although the falls have not been big because market is already quite short of the dollars, but the trend is not changing, and there's no real big trigger that has been helping the market to change its trend. And then, of course, 10-year yields are now very close to the psychological mark of 4.25%. And so I think with the Fed decision infusing more liquidity into the bank books will help the treasury yields to be lower, no doubt. On the dollar, yes, we have seen once again, apart from euro, also dollar yen also slipping to again mid 144s. Commodity currencies are somewhat sidelined. They are not catching up with this fall of the dollar. Even the gold remains somewhat subdued, perhaps consolidating its recent gains. But platinum has been making news, hitting multi-year highs, and it's now already more than 60% higher from where it was a few months back. Some people even calling it platinum as the new gold. Silver has started to pick up a bit more after the recent consolidation. Yes, to answer your question, Swaraj, Euro's journey is definitely on the north side, but I'm conscious still about the positioning in the market, which is quite on the higher side. So the move could be slower, or there can even be a pause, correction in terms of time rather than in terms of price. But medium term direction is definitely higher. On the rupee, of course, yesterday we did slip to 85.85, and that was quite a move from almost a rupee move about a week back when the Iran-Israel tensions were at the peak. And since then, we have swiftly moved down along with the crude oil prices coming off. And the 85 levels actually saw some very good buying, and this buying could be related to month end, and also market not really going euphoric over the recent rise in the euro or the fall in the dollar to affect the rupee, because India has its own concern about the trade deal being finally signed before the December 9 deadline. There are a lot of uncertainties, and in the absence of that, I see the rupee not really making too much headway. Although technicals do show that the uptrend line drawn from 83.77 has actually been broken. But I think if it doesn't sustain that break for a couple of days, and I think we may be in for a small squeeze, or at least a consolidation phase before the tariff issue is settled. Otherwise, we still continue to see some IPO related flows, and on the downside, importer buying also, because it is also a quarter, and there can be more outflows, even from the government side and other corporates, and that can even support the dollar rupee at the recent low at 85.80. Expecting 85.80 on the downside and 86 or 40 on the upside for the rest of the week. Thank you.
Thank you, JK. And just quickly summarizing, of course, with the NATO plan which they have unveiled, it seems the remilitarization theme, as you correctly pointed out, that's the ongoing theme, and of course, not ideal for the world, but that's what is happening. Importantly, Fed announced an easing in the supplementary liquidity ratio. This, from my understanding, is from what JK mentioned, is that it would push more liquidity into the bank's books. So that is a form of easing which the Fed has opted for. Otherwise, commodity currencies and gold generally have been consolidating. We already mentioned there are some trending currencies like euro. Dollar rupee remains quite volatile, like fell to 85 yesterday and saw a good amount of dollar buying. Fallen crude has helped rupee cool off from last week's lows of almost rupees 87. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.